of us don't bother too much on history and psychology. Psychology is the most important thing in the market, is as important as money. History is equally important. If you're not participated in history, at least read history. That is my sincere advice to people. And I mean, I participated in the history. So when have we seen this kind of a decoupling? We saw it in 2000 to 2007. 2000 in February, March, we had the global markets peaking out because of the dot-com bubble, which burst between February 14th and March 23rd, something like that. I don't have the right figures here, but by and large, I'm speaking from memory. Reasonably okay. I will paint a picture. So in the first quarter of 2000, all the global markets peak. Let's compare India versus US, because that is what most people compare, because people don't even know that China today is half of what it was in 2007, the index, Shanghai index. Nobody bothers. Hang Seng is somewhere sitting at 2014 lows. Nobody bothers. Just look at US versus India. US peaked out, India peaked out. From there to 2007, if you take, because after 2007, US peaked out and fell into a bear market. We fell into a bear market from January of 2008. We were a lag of only 4 months. Now, if you take 2007 peak, the NASDAQ was below the peak of 2000, which means it was in a bear market. It never made a new high. NASDAQ did not make a new high even in 2007, 7 years later. S&P went to a double top in 2007. The peak of 2007 was just equivalent to what it was in 2000. So after that, there was a bear market in S&P and NASDAQ. The Dow Jones, on the other hand, made a peak somewhere in a new peak in somewhere in 2005 or 2006. After that, it made another peak in 2007, and then it also went into a bear market. Indian market made a peak in 2004, 5, 6, 7, 8. So Indian market was on a higher high, higher low throughout after 2004. So there itself, there was decoupling. There was decoupling within the Indian US market itself. Dow Jones bullish, S&P sideways, NASDAQ bearish, and Indian market super bullish. We have seen this. So there is nothing new. You see, every event which we are seeing is by and large, it would have been factored in. Something would have happened in the past. Like for instance, Corona happened in 1920s. Of course, I have not recorded what happened to the market exactly in 1920, which is called the Spanish flu at that point of time. But that kind of a panic, that kind of situation happened there. That time Mahatma Gandhi ji himself was afflicted by Spanish flu. So that was the effect of Spanish flu globally. So there is nothing new, excepting that I have not studied in the global markets in 1920 as to how it happened, but that is not relevant here. What I'm trying to say simply is, history repeats itself, they say. Exactly, it will not repeat. It will rhyme. Rhyme means it will go by and large similar direction, magnitude. It may not go exactly the time. So even the direction will be okay. Magnitude will be reasonably okay. Time is the one thing which nobody can predict exactly. So we have seen this. So we have decoupled. Is very clear by data is what I'm saying. The most important thing about this bull market, which is very different from every other bull market, is every other bull market had FIIs as their main drivers for the direction. FIIs buy, market goes up. If FIIs sell, market goes down. I'm talking of significant selling. I'm not talking of a day, week, month. I'm talking of a quarter, 2 quarters, 3 quarters. This time also, first half of the market went against the FIIs. FIIs were selling since April, May of 2021, but Indian market was bullish till October. They continued to sell. Then the Indian market became went in what the FIIs were doing. FIIs selling, market was down. So if you look between April and October of 2021, you would say we don't care for FIIs, because FIIs selling, Indian market going up. But between October 2021 and June 2020, October 2021 and June 2022, FIIs sold, market fell. But subsequent to June, FIIs sold, market went up. So today, the first time, this period is the first time ever. I have been watching FII flows since 1994, January, when Morgan Stanley came into India. Subsequently, other FIIs came in. So I have been a participant on the floor of the Madras Stock Exchange during those days, and as a broker, as a sub-broker, various, as an intermediary, you could say. This is the first time I am seeing this. It has never happened that FIIs are not able to control the direction of the market. So now we have reached what we call a tipping point where the domestic money is overpowering the FIIs money. So when Mrs. Nirmala Sitharaman stands in the parliament and says the crux of this market, capital market, is the retail investor, Indian retail investors, people mocked at her, but she was speaking the truth. That is why I'm saying that when she is so much in favor of the retail investors, very, very unlikely that she will do anything to harm the retail investor. So these are the signals you get. You don't get just signals from the chart or Fibonacci numbers or Elliott or Gann or XYZ theory. You look at what the politicians, the people in the power are saying. They are giving you signals that we are here to not trouble you. That's more than enough. Whether they help us is secondary. If they help us, then the market will fly. If they don't help us, if they don't trouble us, it will be okay. Look at what happened in 21 and 22 budgets. How the market flew after the budget. 21, 22, it was a bear market, yet it went up. She did nothing bad for the markets. 21, she did something good for the markets and the market flew. So that is what the decoupling, that is what the FIIs, the role of FIIs has changed. And we should appreciate that, we should understand that, and then we should plan our trades or investments based on our understanding of the corporate fundamentals. Yeah.
Yes, sir. Sir, I think the fact that how history repeats itself is very true, because the government, the people in power are always trying to convince us that there's something different about this recession right now, especially in the US, but that's never true. So with that, we'd like to move on to the next question. Where do you think are the opportunities now?
See, the opportunities in a bull market are across the board. In any bull market, there are opportunities across all sectors. Now, the point is, most people are not believing this is a bull market. That we can talk on some other day, whether this is a bull market or not. I consider this as a bull market because simple definition, higher high, higher low. And it is also against trend, which means the trend is FIIs are buying, not buying. If FIIs is buying, bull market. If FIIs are not buying, still a bull market. First time. That is why people are unable to believe. Second thing is they're seeing globally markets are down. How come India? Why should India go up? Why should India not go up? If the fundamentals are good, if liquidity is sufficient enough, the markets will go up. This is the lesson I learned in 30 years. I didn't learn it yesterday, today, or last week or last month. And I learned it at very great cost, because I also used to challenge. How can market go up in India? There is so much poverty, rural distress, farmers are suffering. There is a lot of agitation, unemployment, IIP, inflation. But the market goes on its own tune. You have to be in tune with the market. Whenever I've been whenever I've been at a variance with the tune, the market has whacked me left, right, center. Okay. So people have been whacked left, right, center who all have believed that this is a bear market and trying to go against the market. Never go against a trend. They say trend is your friend. Many times people read it in the book and send it as a WhatsApp, but they never practice it. Otherwise, people would have been happy today because they would have said, boss, markets have come down significantly lower, so you will get great prices. You want to buy at lower prices, right? So you should have been welcoming today. On the other hand, you have a lot of people depressed and distressed. Now, which sectors? So you see, the issue is like this. I look at it as that next year globally there will be, things will not be that good, maybe getting worse in global world order. Now, in such a case, what should I do? I should look at domestic facing companies. So domestic facing companies, right from capital goods to pharma, IT, there are hardly any domestic facing companies. So you are having refineries, you are having every sector which is having domestic facing. So you can easily look at any domestic facing sector and try to invest it based on fundamentals. Now there are sectors which may get affected by global also. Say pharma, for instance, maybe domestic plus outside. So you have US FDA coming and interfering. So pharma may not go up. It has gone up in the last 2 days because of COVID. But I think that's the wrong reason for the prices to go up. It will settle down because there is no COVID going to come here. So no need to worry about it. You take metals. Metals is not controlled by, even though it may be domestic facing, it will not controlled by India. It's controlled by China and other countries. So where should you go? Then for me, I look at what is visible to me, which is, which is safe, let me say. See, there is no safety in the market. There's only risk in the market. Less risk or safe. As Chor Ramaswamy, one of the people whom I used to admire, used to say, safe risk. What is that safe risk? Stocks in the dividend yielding stocks in the public sector is, you get a dividend yield which is greater than your FDs. So that is one way of looking at it. My son-in-law's father, who is a 74-year-old gentleman who retired from the public sector bank, he didn't even have a demat account. I forced him to open a demat account in June and told him to buy, instead of putting money in FD, I told him to put it in dividend yielding stocks. So he is getting about 9%, 10% dividend yield, whole India. Capital appreciation is a bonus there. So those are the areas one can go if you want to be very safe in this market. Dividend yielding stocks, there are plenty. They're all in public sector and they should do well. Now let's say take a little bit higher risk. Then what is the government doing? See, every government has got one pet project. Now, during Atal Bihari Vajpayee's time, it was roads and telecommunication. Actually, telecommunication was the UPS pet project. Roads, I would say infrastructure, roads and shipping. Congress second UPA was more on farmers. The Modi ji's government is more on infrastructure building. Today, you are seeing railways as one focal point for infrastructure building. We never had such a thing, though we had railway budgets separately, but we never had railways as a focus for nation building. We never had. Okay. So today that focus is there. So anything connected to railways and infrastructure looks very interesting for me. So then the PSU banks, you go a little bit higher in risk. PSU banks, people have been mocking PSU banks because they think, PSU banks all frauds, because frauds have been committed. History has shown that. But so you have, it is like, somebody who is a good guy, but who did a mistake for some time, went to prison. So once he comes out of prison, you cannot say that he's still a bad guy. He's already served his punishment. PSU banks have served their punishment. So they are basically good guys. They are great banks, but overshadowed by frauds. Today, that thing has been removed. The government is very serious. So they have removed those kind of things. They will not incur again. They've cleaned up their balance sheets. So people will say, no, surely they lend, overlend, they lend it to their cronies and therefore they'll get into trouble. It is like saying, I'm wearing a white shirt, I'm going to work, the white shirt will get dirty by the time I'm come home. But that is a good shirt you are wearing, right? You can go to the office, feel nice. End of the day, maybe in the dust and dirt, it will become dirty. But you can't say when you're wearing the shirt that it will become dirty, so I'm not going to wear this shirt. So it's as simple as that. So for me, PSU banks are remaining there. Then the public sector enterprises. See, what is the government's focus? It's on Atmanirbhar. Whenever a government is having a very clear-cut focus, which this government seems to have, I'm not talking politics here, I'm just talking economics. So I am looking at Atmanirbhar companies. So PS, public sector enterprises. So that is my, let's say, my focus. Now there could be some pharma, there could be some other, hotels, because hotel industry is doing well and will do well. Hotels also cleaned up their books after so many years. So that is a little bit higher risk. Then you go to growth stocks. I'm a value investor. I look at value. I don't look at growth investing. That is, I don't look at PE more than 30. In fact, I look at PE less than 15, 20. 20 PE is where I really begin to wonder. Of course, there can be an odd S bank kind of thing where there could be an opportunity. So I look at those. Those are, let's say, special situation funds. But I'm saying lowest end of the risk is your dividend yielding. Then you go to PSU banks. Then you go to public sector enterprises. Then you're looking at infrastructure, railway. These are the areas I'm focusing on. And my focus is on budget. And I would like to look at it and review it after the budget.
All right. Yeah. Yes, I think you have given a very holistic view in several industries and covered several risk appetite as well. Sir, I'd like to know what are the factors you consider before arriving at a view. They may be industrial factors, macroeconomic factors, risk factors, and so on.
Yeah, I have a very unconventional way of doing things. So, you see, first of all, I have to find out whether we are in a bull market or not in a bull market. So when you're not in a bull market, you still need to invest, right? So you need to be a different kind of investor not in a bull market. Let me call it a bear market. If you want to invest in a bear market, then your criteria will be different. In a bull market, your criteria will be different. Let me give you an example. Last year, my daughter came up to me and said, "Dad, you seem to be an expert in stock market." I said, "I'm not an expert," but she said, "Okay, you're an experienced guy, 30 years. I have excess money. Why don't you give me some portfolio so that I'll do a SIP?" So I gave her only 2 stocks. Now, 2 stocks is dangerous. Somebody tells me that you should have a portfolio of 10 stocks. The portfolio theory says for optimum performance, you should have a portfolio of 8 stocks. Indian mutual funds have 70 stocks. So I told her that at this point of time, 2 stocks are enough. So I bought into ITC and Yes Bank. Now, why ITC? Not because it is, it is the number 2 FMCG. It's not because it's number 1. It's not because, it is into paper. It is the number 1 paper company. It is not because, it is into, what shall I say, hotels. Neither because it is in software. That is all there. That is the growth part. I said, look at the value part. ITC gives a dividend of 5.25 to 5.5. ITC has said that they will give 85% dividend. 85% of the profits will go as dividend. In a bear market, the first thing is safety. So I said, you look at all this. I also looked at charts. I looked at the way ITC has moved in the last 9 years. In 2013, ITC was 250 to 260 rupees. In 2021, it was still at 250 to 260. In fact, it was 200 rupees, 210 for most of the time. Let's take at 250 rupees. So 9 years, the ITC damn thing has not done anything. Nothing. ITC is a profit-making, dividend-paying company for 100 years. It has grown in other sectors other than cigarette. Cigarette has not been taxed for the last 3 budgets, or maybe more. So whenever cigarette is taxed, it always goes up. It doesn't go down. But it's sleeping. I know from history, Hindustan Lever slept like this for 10 years in 2000 to 2010. And then it took off. It went up 10 times in next 10 years. First 10 years sleeping, hardly any return. Next 10 years, it went up, FMCG. So I have studied Hindustan Lever. I said a time for ITC will come. So downside is limited. We are in a bear market. Downside is limited. And therefore, we will, if we buy it, at least we'll get dividend. So growth will come. ITC did nothing till February of this year. And today we know where ITC is. Yes Bank. I bought S Bank because everybody hated S Bank at that point of time. It was about 12 rupees 50 paise or 13 or something like that. I went and studied S Bank. I looked at the performance. People talk of S Bank as no bank at 400 rupees because they have seen 400. So they feel 400 rupees means from 400 has come to 10 rupees or 12 rupees means a bogus bank. It is. It was. But today, those bogus guys are not there. So you have to look at it differently. I keep telling this gentleman has gone to jail, he has come out. You can't say he murdered somebody and went to jail. Yes, he murdered somebody. He took the punishment. Now he's a reformed man. So you have to look at that guy, reformed guy. This may not be a great example. I'm not saying they did some mischief or they murdered somebody. I'm just giving an example in the sense, okay, you do not look just at their past so deeply. That past is gone because those guys are no longer there. Of course, you should look for a good company. You should look at the past before you invest. But this company's past has got nothing to do with current because currently SBI, S Bank is a subsidiary of S Bank in more ways than one because 30% of SBI, 30% of S Bank is owned by SBI and a few other percentage, about 50% is owned by banks. So other banks, Kotak Bank, LIC. So it is a public sector bank. It is not a private sector bank. It was a private sector bank. So you look at it from that angle and look at who is managing it. And you look at the performance, continuously performance increasing. And then you had the Carlyle who bought in at 13.86 and 14.74. The 10% equity they bought. And then they bought, there was a talk then, it got finalized only later, but I'm just saying, the S Bank was on a turnaround path. P ratio, if you look at it, it must be horrible. So everything was horrible, but still something good was happening. That if you really get into it at that time, and it's a bear market, what is my downside? Calculated at 12 to 13, I bought it. And today we sold off. I mean, at 22.5 or something. It went to 24.5, whatever it went. But I'm just saying you can make a decision in a bear market that way. In a bull market, I looked at, we are in a bull market. So what is the story here? The story, macro story is this government is looking for infrastructure. So let us look at infrastructure companies. Let us look at PSU banks. Let us look at railway stocks. Let us look at public sector enterprises, which may not be connected exactly to railways, but which are, good, like in refineries. They could be, even the ONGCs of the world.
Yes, sir. So I think the fact that you pointed out how value investment matters, I think Michael Berry pointed out the great financial crisis through his methods of valuation of finding the right value, and it's a very underrated method. Uh, yeah. So, sir, I would like to know how what are the several ratios and for different industry you would like to consider? For example, you said the PE is one of the prime ratios. What would be the other ratios? For example, EV by EBITDA, then the PB ratios, and mostly used for relative valuation.
Extraordinarily intelligent guy, and he's very savvy, and he's going around, looking for infrastructure in railways.
We're having some technical issues. Please wait for a while.
In a listener's mode, I went out and came back. So my answer, I think it has gone through. Yeah, let's go ahead.
Yes, sir. Yes, so I'd like to know more about what kind of a trader or investor are you, based on maybe your risk appetite, the diversification of portfolio, and other factors if you'd like to list them.
Yeah, see, basically, I'm a student of the market, so I live market 24/7, 365. Okay, so I do everything in the market and experiment and try, get my fingers burnt, sometimes make money, and then learn my lessons from that. So I started as an investor since 1982. I was an investor till about 1995, 96. So for 14 years, I was an investor, which means, in the 90s, you could not even be a trader, because on the Madras Stock Exchange, or any stock exchange for that matter, on the ring, you used to get a two-way quote. The two-way quote, you see, there are no computers, so you have to face that guy in the fish market kind of atmosphere. So he'll give you a two-way quote. He'll say Reliance 3,000, 3,030. Which means he'll buy, you can sell it to him at 3,000 and you have to buy from him at 3,030, let us say, something like that. Or 100, 105. That is the quote, two-way quote it's called. So it was a jobber's quote. So what happens is that 5 rupees is gone there. And if you want to again close the deal, again 5 rupees is gone. So 10% is gone. Sometimes 10% is gone. Lowest, it will go 3-4%. So you can't trade. And those days was cash market, which means in 2 days' time, settlement is there. So you can no futures, not in Madras. There used to be Badla in Bombay. So you can't do. So by force, we were all investors. After NSE came, after some time, I started trading. So I started trading, those days again, F&O was not there. So you started trading, and then only in 2001, 2 options came. So I did trading options. So I did everything. See, basically, I like to experiment in all instruments. Any instrument comes, I will experiment. And see, when you're younger, you take much bigger risk. So I tell people there are old traders and there are bold traders. But there is no old bold trader. Today I'm old. So which means I can't be an old bold trader. Okay, I can be an old trader. Old trader will have a different technique vis-a-vis a bold trader. Bold traders are generally young. Okay, so those days, I will take huge positions, no stop loss, nothing, and just be happy if you make a loss, be happy if you make a profit, kind of thing. Today, as I'm almost semi-retired, my way of looking at things is, okay, what did I learn in 30 years? Because every year from the beginning was a new experience to me. Something or other new used to happen. The last big new experience was this Corona. After that, the new big experience in 2022 is the FII's, what shall I say, importance or the lack of importance of FIIs. So every year you learn something different and you have to change your strategy. So you cannot have the same kind of thinking. So right now my thinking is like this. My job for my family, which is an extended family, which I oversee, and I am more like a mentor, is that I have to identify, something which is suitable to them. Like my son-in-law's father has got some other requirement. My son-in-law has got some other requirement. My daughters have got some other requirement. My mother has got some other. All kinds of people are taking my advice, not advice, I would say mentoring. So I have to view it differently for different people. So I look at, what will suit somebody. But basically at this stage, I'm more of a risk averse person. So my risk will be limited. I've stopped doing F&O. I've stopped doing options. I was very, very, very active in options at one time. Very, very active in F&O at one time. Now I'm not. Now I'm looking at cash market. I'm looking at, if I do day trading, it will be only in the cash market. So I put only maybe 5% of the corpus in cash market. And if possible, I'll take delivery also if something goes wrong. Like today, for instance, I took delivery of Reliance. Though I wanted to close it by the end of the day, I took it because on 28th, I'm expecting some announcement from Reliance, which may make Reliance go up. Because 28th is Dhirubhai Ambani's birthday, and I'm expecting some 5G-led announcements to come on 28th. That may ignite the stock, is what I think. Now, like people buy for the budget now. So I also bought for Dhirubhai Ambani's birthday. So I buy for events. And I try to calculate that what other guys may do. So now you see, today everybody is panicking. People will not get sleep. They would have lost heavily. And they would either go to the bar or they will, I don't know where they go. So I'm sitting here after this, I'll sit down and think, okay, these are the prices. Okay, I bought yesterday actually. I bought today also. But I obviously not bought it at the lowest because after that it has fallen. Some 4%, my portfolio is down by 4% today. Yesterday it was down by about 2%. 6% is down from day before yesterday. That day it went up. The other day it went up. So I'm not looking at day to day. I'm just telling you. Right now here I'm sitting and thinking, okay, who has panicked? So I make out a list of who has panicked. If you look at the FIDI data, it shows as if the institutions have bought more. Then somebody has panicked, right? So I try to find out who are these operators or over-leveraged people. So usually the popular stocks, they would have been over-leveraged, like the railway stocks. They would have been over-leveraged. The stocks which are in infrastructure, because that was the game. So they've all sold off, and significantly they've sold off. So this is the time for me to look at it. So I put in some money there. Yesterday I did it. Today I've done only in Reliance. But I will on Monday. I'll sit down now. Next 2 days, look at the stocks and then get in, because I'm extremely happy today because I'm able to get these prices. I was not able to get these prices day before yesterday or the last week. So I can't be happy because somebody's suffering. I'm happy because I'm seeing the prices. It's not that somebody's suffering, I'm happy. So that is the way I trade. Lowest amount of risk, because I believe that today, I wrote also in my Twitter that today could be the day of the washout. Yesterday, one washout, today could be the day of the washout, because there's too much of fear. Fear doesn't last for long. So I expect that, from next week onward, things should be better, because history tells us that the last week of December is always good. But December is always a very treacherous month where you lose 6 to 7%. So I was expecting 17.8, even up to 17.6. They fallen 17.8 and stuck there. I don't know. It may still go to 17.7, 76. It doesn't bother me. Anyway, I don't trade in index. I'm trading in good stock. I'm trading in stocks. So my stock selection, I have bought yesterday and day for yesterday. I will continue to buy on Monday and then take it forward from there.
Yes, sir, understood. And everyone here, I must have understood how experience helps you understand all sorts of perspectives, may they be psychological, industrial, and every other factor. Sir, one last question from my side would be, what would be your advice to the newbies in the stock market, to the beginners?
See, I will give some advice. They will not follow it. I'll bet 100% they will not follow it because nobody follows my advice, including my wife. Okay, she's not here, so I can tell you that. But my children don't follow my advice. So how can I expect some, random investors to follow? I teach at various colleges. That's why when my answers are always long, because as a teacher, no, you don't know when the time ends. So let's say, forget about advising. Advising is the worst thing because nobody listens to advice. Let's say if I want to be reborn, if I was reborn as a guy who has started in the stock market today, what would I do? What would I do is, first I will look for a mentor, somebody who is experienced and who has been beaten in the market. I will look for that gentleman. Believe me, I'm looking for this so-called mythical person for the last 30 years. I've not found him, but I am a mentor for many people. So first I will look for a mentor. Then, you see, I will look for what is my goal in the stock market. Most people have very, very high goals. For instance, I believe that if you get more than 15% CAGR over 10 years, then you have achieved dramatically great results. 15%, 1.5, but it is CAGR of 10 years I'm talking about. So that is what I will keep it as a goal. And most people who are entering the market, I assume, are in the 20s to 30s bracket. You can afford to take a little more risk. There's no problem in taking risk because you learn from the risk how difficult it is to make money in the stock market. To make more than 10% in the stock market on a regular basis is extremely difficult over a 10-year period. I've experienced it. I have made some fantastic money. I've lost fantastic money. So if I were to say in the next 30 years, if I'm going to start my second innings, say from today, now I'm 60, so 60 to 90 years. My astrologer said I'll live up to 92. So let's say 2 years before my going away, 30 years. So I will keep a 30 years. So I'll say, okay, in 30 years, I should be able to make 10%, 15%, 10%, 15% if I make, I am a good person. So I should look for stocks where I should be able to get reasonably return between that range. A 15% return I should aim for. Like in a bull market, I aim for 25% return. I aim. It doesn't mean it will come. In a bear market, I should aim for about 10%. So somewhere I should be able to get 15%. Because you don't get all the time, you don't get bull markets. Neither do you get bear markets all the time. So you should aim somewhere between 10 and 25. So somewhere median will be 15%. So that is the second. Once you have these basics, you don't have to have any great knowledge, experience and all that. You need to have one mentor who will kick you and tell you, boss, you're going away from the path which you have set. Once you have this, India, luckily for all of us, is a growing market. It is in a bull market, overall, macro. Long term. So you don't have to worry too much about, losing everything. That if you buy into good stocks, you will not lose. I just gave an example of dividend yield stocks. There itself you'll get 8-9%. Plus capital appreciation will take you to 15. And these dividend yield stocks are there every time. Every time they give dividend, because the government companies, they will give. So long as they give, that you are protected as far as your dividend yield is concerned, which is 8-9. Then your capital appreciation, you have to choose pricing. So you'll have to think. You'll have to do some technical analysis. Look at the moving averages. Look at whatever you're comfortable with. See, investing is, it is what I would say, it is simple, but it is not easy, as they say. Investing is really, really, it depends on so many factors. Suddenly something may happen, and for the next 2 days, like COVID, they said, and the market has fallen. Actually, nothing to do with COVID. It is simply leverage, over leverage. But these things will throw you off balance, will make you feel miserable, will not make you feel to go to a good function today. A happy function, you will not. You will see if you go to a wedding today and if people see with small face, those guys are the traders. You can be sure on that. So therefore you have clear-cut definitions like this. I have tried to do that. And more so in the last 2 years, I've tried to do that. I've tried to inculcate that into my family, saying, have reasonable expectations. You will get stocks. Number of stocks are there. This is like a buffet. Even today, I'm telling you, even today, it's like a buffet. There are at least 15, 20, 30, 40, 100 stocks which are good, which will give you these kind of returns. But you see, sometimes it will trouble you. But if you're looking for, let's say, 18 months, keep an 18-month period, by and large, you should be okay. This is India, you don't have to worry for some more time to come. Some more means 5, 10, 15, I don't know how many years. But right now, you don't have to worry.
All right. Thank you so much, sir. With that, I would like to open up the stage to questions if anyone has any.
Nobody seems to be asking any questions, or there is some technical problem. I think Anushvi, somebody wanted to ask a question. I think they raised a hand. Is there some
Yes,
way you
sir.
can put them up? Yeah.
गुड इवनिंग सर.
Yeah, namaskar, sir.
अगर आपके घर में आपकी कोई बात नहीं सुनता ना, तो आपको ये सोचना पड़ता है कि मार्केट में बहुत सारी चीजें सही होती है, गलत होती है, और हम लोगों को बहुत सारी चीजों को एनालाइज करना पड़ता है. लेकिन आप अगर अपने घर के आसपास के 4 लोगों को कन्विंस नहीं कर सकते ना, तो आप है ना स्पेस में आके ये मत बोलो कि मैंने ये किया है.
Okay, doesn't matter. I made it as a joke. I think you took it seriously. Doesn't matter.
नहीं,
I got enough number of
नहीं,
people who listen to me. I
नहीं,
just,
आप इसको
yeah,
जोक
let's leave
नहीं,
it there.
आपने जोक की तरह नहीं, आपने कोई बात जोक की तरह नहीं बोली थी. आपने इस बात को सीरियसली बोला था. You need to understand one thing. When people, when people start listening you need to understand one thing. As a market participant,
I would not like to continue this discussion further, sir. Thank you for your advice. I take it in the right spirit. Let's leave it at that.
because when you participate in a space na, you
Apologies, sir. If anybody else has any questions,
I'm used to these kind of trolls. I cannot do anything. So I don't know why people come and listen. No, why would you want to listen to and waste your time when you want to make such remarks? That's okay. That's okay.
Abhiraj, if wants to.
Yeah, I have a question, sir. How do you manage the psychology part, which has now become, extremely? I mean, I'm a new in the stock market, so how do you manage the psychology part when you were trading during options and futures? There is always a chance that you exit at a position and then you get more money and then you do a revenge trading or anything like that. How do you manage that with your experience?
Yeah, thank you, Abhinav. That's a very, very good question. Very fundamentally, I think a lot of people face this. A lot of people have come to me and asked me, how do I manage? See, believe me, my grounding has been in the Madras Stock Exchange, where on the floor. You see, there I really had some, people. I saw people how they managed. See, in this, what shall I say, in screen-based trading, you don't see the other person, right? The buyer. If you're a buyer, you don't see the seller. But in the floor, you actually see the seller. And if he has sold to you and he has short sold, you will know also who are the short sellers. And he has sold to you and he short sold to you. You will see the difference. The people panic. You can see the panic in their eyes. Okay. So the trick, what I learned is that, never show your emotions. Never. Whatever the other guy may do, you don't show it beyond a point. Okay. You can be very gently tell, you can very, what shall I say, if the guy is trying to push you down in terms of pricing, they'll hammer the prices in front of you. Or they may jack up the price in front of you where you have sold and you're gone. See, one broker, while I don't have any mentor, I learned some lessons from the floor, which have been lifelong. There was a very famous broker on the floor. So he is very calm. He's like Buddha, he is. Okay. So I used to ask him, see, you do so many trades. How are you like this? So he told me one thing. He says, Vijay, when I buy a stock, because I'll buy from you, I'm seeing you. I hope and pray that the stock price comes down. Okay. The stock price comes down. That is very negative, right? See, I'm buying something and I'm hoping and praying that it will come down. And when I sell a stock to you, I'm hoping that the stock price goes up because, again, that's a negative thing. Why? If I buy from you, you are standing in front of me and you have said, boss, this is a good price to sell, and you have sold it to me. And let's say the price comes down. Will you feel happy or not? You will feel happy. You thought, okay, this guy is a fool. He has bought it at high price. I was able to con this guy. Similarly, when I sell to you and the price goes up, then you will feel, see, I'm a smart guy. This guy is a dumb guy. He sold it to me at such a pathetic price. That was the philosophy. That is the philosophy I try to put it in my day-to-day trading. So, we used to have this, informal club. When we finished the trading at 3:30, that time the trading was between 9:50 and 3:30. None of our traders, you will not be able to make out from their face whether they have made money or lost money. None. That environment I grew in, and that is exactly what I do. So I assume like this. In fact, one of the Madras Stock brokers told me, loss is a certainty, profit is a probability. Now, that is a very pessimistic statement. How can you say loss is a certainty and profit is a probability? But look at the wisdom in that. The wisdom is that you are getting into the market thinking that you will manage your losses, because loss is guaranteed, right? So if you are able to manage your losses, profits will come automatically. That is what I learned, and that is what I do. To be very honest with you, you may think I'm bluffing, but I really, really never bother if the price has gone above my price when I sell. Similarly, if it comes down. See, I have some process. In that process, I will enter and exit. The other day, I bought LTTS, because I thought there's a turnaround in the tech. So after some time, I was a little concerned because you see in the US, the jobs were, a lot of people were being laid off. So I thought certainly this tech sector will get affected in the next 2-3 months. This is about a month ago. So I had some 5 stocks in tech. I had bought for a trading bounce. I had not bought at the low. I was looking for a trading bounce. So that day when it struck me that something good will not happen in this industry, so I sold all the 5 stocks. Now all the 5 stocks after that, 4 of them or 3 of them were there, or they might have come down or gone up a little bit. So no regrets. But LTTS went up 9% after I sold. Now I took it as a joke and went on in my spaces and clubhouse telling people that, you do this and then it goes. Because the market doesn't know who is buying and who is selling. The market only knows that, if there are more buyers, the price will go up. If there are more sellers, the price will come down. So over a period of time, I have developed this. I really, really don't bother too much beyond a point. I don't bother at all. See, if I have done my homework well, I should get some rewards for it or get less pain for it. More than that, I don't want to, worry about it. It's gone up 9%. See, for instance, I bought some stocks I told you yesterday and day for yesterday. Or even Reliance today I bought. It has come down. Now, what do I do? When I bought, I was very sure that I'm buying with the knowledge that the price can come down. It has come down, so be it. I'm right to that extent the price has come down. But if it doesn't go up after 28, then I'll think, okay, it was a bad move. I took this move based on Dhirubhai Ambani's birthday announcement coming, some 5G announcement, something will come. Normally on Dhirubhai Ambani's birthday, it will come. So I've punted it on that basis. So I just hope that something will come and price will be higher than I purchased. Let's say it doesn't come, then I'll sell it off. It's okay. That is a lesson I learned, that this time it did not work out. So that is the psychology.
All right. We'll have one last question.
Yeah. If there are no questions, then you can just conclude. I'll be happy to answer that.
Yes, so 1 second. AK.
हेलो
Dave, you can now speak.
Hello, sir. Good evening.
Good evening, Dave.
Sir, though I am first time listening you, this is a very good space and very knowledgeable for me. मुझे आपसे ये पूछना था सर कि पोजीशन साइजिंग कैसे करते हैं और आप उसको कैसे कैरी करते हो, पिरामिड करते हो या फिर किस तरह से पोजीशन साइजिंग करते हो और पोर्टफोलियो का कितना परसेंट एलोकेशन करते हो, ये इस कुछ चीज़ों पे आप थोड़ा बोलेंगे तो ठीक रहेगा.
Yeah, thank you, Dev. I'll answer in English. My Hindi is not that good.
It's okay, sir.
So, yeah, it's okay. With your permission, I'll answer it in English. See, position sizing is one of the most important things and which is the most neglected things. And, nowadays we have in books, we read about how position sizing is done. And then, we forget about it when we enter the market. As they say in the war room, when you're fighting a war, in the war room, you discuss all strategies. And everything looks fantastic. And as soon as you go into the battlefield, the first bullet comes, let's say it doesn't hit you, but just goes beyond your ear. Then you panic, and then you do things which you will not have thought in the war room, or no strategy is working there. But I think, as a general, while different people have different approaches. See, my approach is, now you take the first case where I told you that we bought ITC and this S Bank. So I bought it 70-30. Now 70% went into ITC, 30% went into S Bank. Now a lot of people made fun of me because they said, "What is this? You've got 30 years of experience. How you invested only in 2 stocks?" But what happens is people, it's very easy to mock somebody. It's easy to bring down somebody. That's why in gossip, you are only talking ill of other person. You'll never talk well of other person. That's generally human nature. So if somebody says something, you'll say, "Boss, you don't know anything." But if you read the portfolios of big investors, you take Warren Buffett. Warren Buffett, more than 80% of his stocks are there only in, 80% of his wealth is only in 10 stocks. 10. But if you take local mutual fund, they've got 90 stocks. So their position sizing will be, he would have position sized based on the current, what he's got the money with him. That is one way of position sizing. The other way of it is simply split into 10 buckets if you're buying 10 stocks and then do the position sizing. Another way of it is you'll say, okay, I'll buy 50% right now and 50% below a certain percentage based on the movement of the stock. See, when I do day trading, I never put stop loss. Okay. Why? Because I have no intention of, simply cutting a loss just like that. If there is some reason, I'll cut it, or I'll cut it at the end of the day. If I don't want to cut it, I should be able to take delivery of that. That is how I do it right now. But when you're doing leverage, obviously leverage means you're not going to take delivery, you're going to do something, then you need to put a stop loss. Even for non-leverage, I put a stop loss of 12%. In my recent portfolios, I have got about 35 stocks. They're currently 35, but they were 50. So out of that, some of them profits have been booked, some losses have been booked. Those losses have been at 12%. 12%, when it falls down, I am out of it. So that is one way of, attacking the problem. Typically, what I do in day trading or even in investment, I never fire all bullets at one time. I will position size it in saying, I will do either 25, 25, 25 when I'm doing investment, or I'll do a SIP, which is a different way of position sizing. In day trading, invariably, I will buy and once more, buy once more. Buy once more. So I average. Most people won't do that. They will say, okay, they'll put a stop loss and get out of it. My style is different. It is not, it's unique, I feel, because many people will not follow this. I do an average because I want to do an average, not because I'm forced to do an average. Okay. So I do an average even at the higher level. If it is going up, I pyramid. But generally, Generally, I don't like to do a pyramid on top. There are people who suggest that if you're on a winning streak, you do pyramid. The problem in doing a winning pyramid is that you should again know that if it comes below your original purchase price, then what happens? So those are all practical difficulties. In theory, you can write so many things, you can advise so many things. So when you are trading or investing, you have to develop your own style. Coming to Warren Buffett. Now, Charlie Munger is the partner of Berkshire Hathaway. Now, Charlie Munger has investments only in three. One is in Berkshire Hathaway, one is in Costco, which Buffett refuses to purchase, and then the third one, he has given it to a Chinese investor to invest. So for him, there are only three vehicles. There are big investors, legendary investors, who have invested in less than in 10. On the other hand, you have Peter Lynch, who has invested in some 1,000 stocks. So it depends on your mindset. So there is no such rule. See, I read a lot of biographies. I look at the investing styles. Actually, everybody has got a different investing style. There is no such one investing style which fits in. And the same investing style may not fit in after a few years. It may not fit in for a few portfolios. So it changes. Basically, I would say divide it equally into, say, whatever portfolio you want to have. Put a stop loss. Try to reverse pyramid. That is pyramid only when it comes down rather than going up. Because this momentum investing is a completely different ball game. I'm not good at it. I don't think it works so easily. It looks very sexy, but in reality, it doesn't work. That is my experience. And my experience is based not on my personal experience as much as I managed clients, about 10,000 clients I would have managed in my previous avatar. And I would have seen at least 30,000 traders in my life over 30 years because I was a very active guy. I used to be in association, I used to be in Rotary clubs, I used to be various places. So as a teacher, as a visiting lecturer for corporates, so I have met, even today I meet traders who are nothing. I don't get any money out of it or something. Like let's say if I'm sitting here now, I'm talking to so many people. So some of them may become my friends. They may send me a DM and we may discuss. I don't recommend stocks, but an idea we'll discuss. So you get new ideas. Right now, my thinking is like this. This is what I'm doing right now. Thank you, Dev.
Right. Thank you so much, sir. The questions which have been answered by you have been very insightful. They've covered all aspects of the market, and I think everyone here at this podcast has learned something. With that, we'd like to end our discussion here, and have a great day, everyone. Thank you so much.
Yeah, thank you, Kuldeep. Good night, and thank you for spending so much time